Would you like to trade with ready trading strategies? I know how hard it can be to find a profitable trading strategy for Forex trading. That is why in this course I have put together 5 different trading strategies that I have been using for quite a while now. Welcome to the brand new Top 5 Forex Strategies course. Thousands of students took the original course and I have taken their feedback and suggestions to build this brand new course from scratch. In this course, I put together the best trading strategies from other courses and my own trading experience. This is my job. I trade daily, I create new strategies and I follow the results. It is my pleasure to share these strategies with you. With the new strategies, I have included more explanations about each strategy, more practical activities and attached resources. We are sure you are going to love this course. If you don't, there is a 30-day money-back guarantee. What's more, I have included the 5 robots for these strategies as a bonus gift. This means that you can trade the strategies without having to stay in front of your computer screen. This is how I do it. Once enrolled in the course, you will be granted a lifetime license for it. I have been updating the course every month for 3 years now, and I plan to keep updating it in the future. Every month I review the strategies, and if any changes needed, I will make the change and let you know. This course is also suitable for beginner traders. I will show you step by step how to set up your screen for each strategy, how to execute the trades, and how to trade with the robots. The 5 strategies are for different currency pairs. By not relying on a single strategy and a single asset, I achieve better risk diversification and more stable results. My goal is to show you realistic trading using these strategies, and you will learn how to test these robots on a virtual account. You won't be risking any real money while trading. Best of all, I will show you step by step the complete process in a relatively short course. Secondly, you will feel super cool when you start trading with robots while you are doing something else. Enroll today and bring your trading up to a professional level. Welcome to the Top 5 Forex Trading Strategies course. My name is Petko Aleksandrov, and in this course I will teach you how to use my best trading strategies. I have been trading for quite a long time now, and 3 years ago I decided to start sharing my strategies with others. I uploaded a couple of videos online and there was a massive interest, so I decided to group them into courses. Nowadays, I already have over 30 online trading courses where I show different methods of strategy creation, how to analyze the market, and how to trade with expert advisors. What makes this course one of my favorite is that I put it together with the best strategies from all the other courses and all my trading experience. Anytime I find a better strategy, I add it to this course. Now, I know that most traders prefer to trade manually. This is why I have dedicated 10 lectures in this course to explain how the strategies work, what indicators are used, the parameters, and all the details you need to know before trading. For those of you who are like me and prefer algorithmic trading, I have attached the expert advisors, or the so-called robots. If you are a beginner trader, you will see a step-by-step guide on how to place the expert advisors and how to trade with them. I will also show you how to use the MetaTrader platform, which is the most common platform for trading. It is free, most of the brokers provide it, and it is easy to use. Hello traders! In this first lecture, I will explain to you what the Forex market is in the simplest terms possible without theory. Forex is the largest market on earth where traders can buy and sell currencies. With over $5 trillion in daily transactions, there are many participants: the traders, banks, huge companies, hedge funds, investors, and Forex brokers. The Forex brokers are exactly who we will use as retail traders to access the market. These are huge companies that offer the trading platforms we use to buy and sell currencies. Now, there are reasons I prefer the Forex market over equities, bonds, commodities, or any other market. The Forex market is open 24 hours a day. Monday through Friday, the spread and commissions are lower compared to the other markets, which makes Forex a very accessible way to participate. Because the spread for the currencies is so small, it makes Forex the most suitable for algorithmic trading. If you are a complete beginner and this is your first trading course, do not worry, it is not complicated. In the next lectures, you will learn about the spread, the platform, and how it works. Most brokers use CFD trading, which stands for Contract for Difference. This means that every time we open a trade, we make a contract with the broker. If the price goes in our direction and we close the trade, the broker will pay us the difference. This means that we don't physically buy or sell the assets, but we are speculating on their value and can profit in both directions. For example, we can sell euro-dollar. When the price goes lower, we can close the position and take the profit. So here are the steps that each trader goes through. First, you need to choose a trading broker. There are thousands of brokers, and in the next lecture I will give you some tips about them. Secondly, you will have to select the platform you will be using. For my trading and training purposes in my courses, I use MetaTrader. This is because it is a free platform, most brokers offer it, and it allows algorithmic trading. At the end of this section, I will show it to you and I will teach you the basics that you need to know for the 5 strategies in this course. Third, you have to decide if you will be trading manually or algorithmically. I highly suggest you complete this course before making that decision. This way you will have a clear understanding of what manual trading and algorithmic trading are. Fourth, you will have to select your strategy for trading. Many beginner traders begin to buy and sell based on information they have heard on the news. They look at the economic calendar or they listen to a friend. That is a huge mistake and a big reason why most beginner traders end up losing their money. You need to have a precise strategy and stick to it. In this course, I will teach you 5 different strategies. It will be your choice if you want to trade using one of them, a few of them, or with all of them. Lastly, you will need to test your strategies on a demo account. With Forex brokers, it is possible to have a free virtual account. This way you will have access to the market and you can practice as long as you wish. When you're ready, you can fund a real trading account and start trading. I suggest that you don't rush into trading. Spend as much time as you need to practice until you are comfortable with the strategies you will be using, and until you are sure you're ready to risk real money. The first step in trading is to choose a trading broker. This is not something that is really easy because there are so many brokers to choose from. People often get confused about the differences between them, how one is better than the other, and so on. The most important thing to remember is to choose a regulated broker. As with all other businesses, there are scam brokers that do not offer fair conditions to their clients. We have begun a special topic in our forum at EA Forex Academy called How to Recognize the Scam Brokers. This section illustrates how scam brokers work and what you need to be careful of when choosing a broker. Unfortunately, many students and traders have had bad experiences. They have shared them in this forum topic for us to learn from them. In this lecture, I have attached a PDF file listing some of the most popular regulators. So when you are choosing a broker, you can refer to this list and make sure one of these companies is regulating your broker. Brokers usually have this information on their first page. It is also a good idea to check the broker's number on the regulator's website. Moreover, I would suggest looking over reviews from other traders for the broker you have selected. The best option is to use a big broker with a well-established name and reputation. They cannot really afford to hurt their image with bad business practices. Now, I'm not personally connected with any broker, so I do not suggest any. This is a personal choice. Just make sure you have chosen a regulated broker with small spreads and commissions. If they have MetaTrader, that is even better, as you will be able to test the expert advisors from this course. However, if you are still having a hard time selecting a broker, let me know. I will help you with that. Many of you are probably wondering why I have included 5 strategies and 5 robots in this course. In some of my courses, I include up to 100 strategies. You may ask why I don't do one course with a single best strategy so it will be easy for everyone. The truth is that every strategy has periods of profit and loss. Of course, as a general rule, we are looking for strategies that have more profits than losses. However, the losing period in a strategy can last from a couple of days to a couple of months. If you are trading with a single strategy and you hit the losing period, you might be trading for a long time, getting nothing but losses. I was a beginner trader once too. I spent a long time testing different strategies. I would test one strategy in a demo account for a long time, then I would switch to another. Some strategies were profiting, some were losing. One day I realized that I needed to trade with multiple strategies in the account instead of just using one. This way, when one strategy is losing, the others compensate for it. This helps avoid dramatic drawdowns and achieve better results. Now, you might ask why there are losing periods for each strategy. This is because the market changes. It is different every day. There are periods when the market trends in one direction or the other. There are periods when the market is sideways, staying within a range. There are fundamental periods when the market is affected by huge economic events like what we had recently with Brexit. It affected the pound and euro a lot. And there are such events daily which cause the market constantly to move up and down. This is why we cannot expect to have a strategy that profits constantly. The losing periods on the strategies are called stagnations. Later in the course, you will see what an equity line of a typical strategy looks like. The strategies I have included in this course are very different from each other. They have different logic, different entry and exit conditions, different stop loss and take profit, and they are mean for different market conditions. Some of them follow the market trend while others apply to the sideways market. Using these strategies, you will be able to cover different market conditions and you will diversify your risk by not solely relying on one strategy. I have been trading for over 10 years now. I started with manual trading, after that I specialized in algorithmic trading, now I have combined the two. In this lecture I want to give you a general idea about the differences between manual and algorithmic trading. Later in this course you will see it practically as I demonstrate how the strategies work for manual and algorithmic trading. Now, when can you trade manually? You need to follow the charts very carefully. Depending on what strategy you will be using while trading, you need to have the indicators on the chart and wait for the right moment. The positive side of manual trading is that we have full control over the trade. You decide when to open and close it. You can also combine some technical or fundamental analysis with a strategy to help choose which asset to trade at the specific moment. The negative side of manual trading is the beginners may let their emotions get in the way. People feel anxiety when they are profiting because they do not want to lose that profit. Sometimes they hurry to close the trades too early. Some feel greed, and after a couple of profitable trades they open huge positions that their accounts cannot handle and they lose it all. Or when people are at a loss, they tend to hope that the market will recover and refuse to accept that they made the wrong decision. Sometimes these losses become bigger ones. One of the ways to avoid having your emotions involved in trading is to use precise strategies. This is exactly what I will show you in this course. This means that we will follow rules to enter and exit the positions. We will use stop loss and take profit, so there will be no doubt if we should close the position or not. However, some traders still can't resist putting emotions in with their predefined strategies, and this makes them lose. The solution is algorithmic trading. From my experience with the thousands of students in my courses, I believe algorithmic trading is more suitable to the beginner trader because it removes the emotions. When trading with expert advisors, the trader does nothing manually. The experts open and close the trades while following the rules for the strategy 100% of the time. There is no emotion to interfere with it. Another positive thing about algorithmic trading is that the experts trade all the time. They trade 24 hours a day, Monday through Friday. This is something that is impossible for humans to do. We cannot trade effectively for more than 8-10 hours. Additionally, when humans trade, we can trade 2-3 strategies at a time. I believe the maximum is 5 strategies we can trade at once, and that is why I selected this number for the course. When we do algorithmic trading, we can trade dozens of strategies simultaneously in one trading account. Please don't get me wrong, I'm not saying that you have to do algorithmic trading. I'm just sharing my experience in hopes of making your choice easier. In this course, I will show you how to trade with these strategies both manually and algorithmically with the expert advisors. If you are hesitating, try both ways and see which one works best for you. For me, as a professional trader, I need to have expert advisors for every strategy. This is so I can make a backtest, see how it performed during the last several years, analyze it, and I can run some robustness tests. This is something I do for all my strategies. In this course, I will show you how I do it. Hello dear traders, it's Petko Aleksandrov, and in this lecture I would like to make a brief introduction to the MetaTrader platform for those of you who haven't used it, so you will know the basics and you will be able to apply the strategies that I will demonstrate in this course. Now I just installed one MetaTrader platform on my computer, and there is a web version of the platform, but in the web version you cannot trade with expert advisors, which I will include in this course. So if you decide to trade automatically with the strategies, and this is why normally I install the platform on my computer, because I use the expert advisors. Now when you install the platform, by default you will see the main chart with some indicators over it. So for the very beginner traders, the indicators are all these lines that you see over the chart. These ones over here, all of them, they give us signals to trade, and by combining them the trading strategies are created. Now if I remove the indicators from the chart, I will right click and go to indicators list, and I remove them. I will remove this one as well, so I will have the plain chart, just the price with the candlesticks. I will talk a little bit more about the candlesticks and the bars in this lecture, but if I just have the chart with the price, it's really hard at any moment to say where the market is going. For example, if I'm at that moment, am I going to buy or am I going to sell? Is the market going upwards now, or is it going down? Where it is, we don't know that. It's really hard to say that, especially if you're a beginner trader. You cannot read all these candlesticks and the patterns they form. Alright, so we need to use these indicators in order to decide whether we are going to buy or we are going to sell, and at what moment we are going to do it, because this is also very important. Now what you see are the candlesticks. If I zoom it, you can see that they are different colors. So in this case, the white ones are the negative, and the green with black inside are the positive. We can change the colors, I will show you that. And if I switch to bars, you can see that it's pretty much the same thing, but we don't have these colors. So the candlesticks, they show us a little bit more information. If I put the mouse on the closing of any of the candlesticks, let me zoom it more. For example, if I put it right over here, you will see the open, the high, the low, the close values. So each candlestick, it opens at one price, and then it moves up and down and closes on another price, and it forms the body, which gives us the color. So if the candlestick opened here and closed here, it will form negative body and it's fulfilled. Now if it is positive, like this one over here, it opens at one price, moves up and down and closes right over here. And all of the candlesticks, you can see they are very different because the price moves up and down all day long, and it forms different candlesticks. And I'm on M1, so each candlestick is 1 minute. You can see now that the price went up aggressively, going up and down, but this is just because it's 11:30. There are some news on the market, on the economic calendar. Now if I switch to bar one more time, you can see it's the same information, but the difference is that the open price is showed with a small horizontal line on the left side, and then the price goes up and down, and when it closes, it displays with a small horizontal line on the right side. And it's still visual, but for me, candlesticks is more visual, and especially if you're a beginner, candlesticks definitely is more visual. And if I switch to line chart, this is just one line connecting usually the closing points of the bars, and it forms a line which will show you the direction, but no information about the individual bars and candlesticks. Okay, so normally I stick to candlesticks. And how you can change the colors: right click, go to properties, and then you have colors and common. So for example, from colors, I prefer to have a white background. It's more visual when I have indicators over it. And bar up, this is the positive bar, I will make it blue, and bar down I will make it black. So the positive bars will be blue and the negative bars will be black. Bull candle, I would like to have it in white, so this is like what is inside the body of the positive candlestick, okay? And the bear candle, as I said, I will make it black. Line graph, I will leave it to black as well. Volumes, normally I'm not using it, I will leave it to black. Ask client stop levels, red is alright. Now in common, you can decide whether you want to see the open, high, low and close values, which is good to know at any moment. And as well, if you want to show the grid behind the grid that you see, you can remove it. I personally remove it as well. And if I click on OK, you will see what is the difference. Okay, my chart looks very different. The negative bars are the black ones and the positive ones are the blue ones. So it's up to you really how you want to have your chart. For me, this is much more clear. I really like the white screen when I'm trading, and when I put the indicators, it's very easy to see the details, okay? Now, if you set one chart, like for example, if I want to keep these colors for all my other charts, I don't do this manually for each one. You can save it as a template. Actually, this is the one-click trading which I remove. From here you can buy and sell with one click. I will remove it and I will create a template, save template, and I will name it white background. And I click on save. And then if I go to dollar yen, for example, I go to templates and then I go to white background and you can see it's the same thing. So I don't need to do it for all of them. I just use the template. Okay, and here below I have opened the pound dollar, dollar yen, euro pound, euro dollar, and as well I have the euro yen. So these are the 5 currencies that I will be using in this course to show you the 5 strategies. Okay, so this is pretty much about the chart. During the course I will show you how to add different indicators and what they mean. And I have a separate MetaTrader course that I explain about all of the indicators in MetaTrader, what they mean, how you can use them, the different strategies you can have with them, the different signals they give us. But in this course you will learn the most important indicators and how I combine them in the strategies. Okay, so on the left side we have the market watch. This is where we see the assets for trading. We have the bid and the ask price. Normally we are buying on the ask price and we are selling on the bid price. So you can see that the ask price is a little bit more expensive than the bid price, and this is very normal. We are buying on a more expensive price, selling on the cheaper one. The difference between these two is called spread. This is what the broker benefits. Same as the exchange bureau or the bank. When you go to exchange currencies, there is a spread. There is difference between the bid and the ask price, but in the bank, in the exchanges, the difference is much bigger. Here, when we're trading with CFD brokers, we have very small spread. If I right click and I go to spread, a third column will show up and it will show us what is the current spread with the asset. So for example, you can see with the euro dollar, with the pound dollar, it is below 1 pip. It is 3 to 10 points changing, it's floating, and we have 5 digits after the decimal comma, and the point is the last one. Okay, so for the beginners, how we pronounce the price, we can say that the pound dollar is 129.36, 129.34. We don't say the last digit. Okay, we don't say 129.35. 9, or we don't say 129.353 or something like that. Okay, it is 129.34. We don't pronounce the last digit, and the last digit is the spread, which is the difference. This is just for you to have an idea. If you want to open a new chart like what I've opened here, you right click and you go to chart window and a new chart opens. If you want to close it, right click close. Really easy to get used with the platform. Below we have the navigator where you can have your accounts, indicators. You can add indicators from here. You can add indicators from insert. I will show you that during the course. We have expert advisors tab where we will add the expert advisors later in the course, and I will show you how to place them properly and how to trade with them. As well, there are scripts which are useful tools that we use especially in algorithmic trading. I will provide you with some scripts as well. And below we have the terminal where we see the balance. I have opened an account of $10,000 for the demonstration of this course. And here we will see all the opened and closed trades. So pretty much this is the very basic of MetaTrader platform. Along the course I will show you more, and of course if you have any questions you can always ask me. Alright, so in the next video I will go straight away to the first trading strategy. See you there! Dear traders, the first strategy I will start with is for the pound dollar, and this strategy is in this course since the beginning. Since I created it, I didn't move it because it works still fine. I really like this strategy, I use it, and I'm very glad to share it with you. So what I have here is pound dollar on M1, and this strategy was created for the pound dollar, so I don't suggest you using it on the other currencies. It is for the pound dollar, meaning that you need to trade it on the pound dollar. Now what I have is one chart on M1, but I will need to open two more charts. One will be on H1 and one will be on M30. Okay, let me place those together. So I have M1, M30. I will switch the time frame to M30. So each candlestick will be 30 minutes. This is what the time frames are. Okay, and I will go to template and I will switch to white background. Same thing for H1. Alright, here it is, white background. Now I want to see the three of them together. So I will right click and go to tile windows, and I will have all the windows that are opened, but I need just those for the pound dollar. Here they are, the three of them. I will extend them, M1, H1, and then I will have M30. Here it is. Let me change the M30 and the H1. So I have M1, M30 and H1. Okay, so why did I do that? Why I opened three charts for one and the same currency pair? Now on M1, one more time for the beginners, we have each candlestick showing 1 minute of a time. On M30 it is 30 minutes, on H1 it is 1 hour. Now for this strategy I will be executing the trades on M1, but I will follow the bigger trends on M30 and H1. Alright, so I need to look at them. What I will have on H1, I will have a MACD indicator. I will go to insert indicators and I will go to MACD. Here it is. Now instead of the common inputs, which are 12, 26 and 9, I will be using 12, 28 and 9. And later in the course I will tell you why I don't use the default parameters. And actually from now I can tell you that the default parameters are created from the brokers to make the traders lose. So don't expect to make profits with the default parameters, okay? It's not going to work. So here I have 12, but later in the course I will share with you how I know which are the proper parameters of each indicator for each currency pair for each strategy. Alright, I will click on OK, and here it is, the MACD indicator displayed below the chart. As well, I will have the MACD indicator on the M30. So I go to Insert, Indicators, Custom, and I go to MACD. Here I will be using 12, 20, and 9. Okay, here it is. I click on OK, and the indicator is displayed below the chart. Also on M30, I need to place two moving averages to create the so-called moving averages crossover indicator. Simply two moving averages that will be crossing, but in MetaTrader we don't have the moving average crossover indicator. We have just moving averages, which is just enough. So I will go to trend moving average, and the first moving average will be with period of 5 instead of 14. And I will click on OK. Let's make it first a little bit thicker so it will be more visual. Click on OK. Okay, here it is. And the other moving average will be with period of 95. And this is a slow moving average. Okay, when we have a small number, it is called to be a fast moving average. When it is a huge number, this is a slow moving average, and I will tell you why. Because when the price changes, let me make it on a big screen for a second. When the price changes, the slow moving averages change very slowly after the price. But the fast moving average with period of 5 in this example, you can see it follows the price much quicker. Let me zoom out so you can see better. Okay, so here the price was going up. You can see the slow moving average was following it. And then when it changed, it took some time for the slow moving average to change down. But the fast, it follows the price pretty quickly. That's why it's called fast moving average. Now, there are different strategies with the moving averages, but with the MA crossover or the moving average crossover, we have the signals when the two moving averages cross each other. So for example, you can see when the fast moving average crosses the slow, it gives us a buy signal, the price goes up. When it crosses down, it gives us sell signal, it goes down, up, down, and you can see from this moment here, when the fast moving average crossed the slow moving average, the price went down, and it's still lower until this moment. The two moving averages didn't cross. Okay, this is just an example strategy that I shared with you, but for this strategy we will be using something very similar. Okay, so this is what I will have on M30. Let me zoom it a little bit. I have the MACD and I have the moving averages. Okay, if you want to go till the end of the chart, you can click this button over here, which says, if I put the mouse on it, scroll the chart to the end on tick incoming. Okay, and if you want to go to the beginning, use this one. Normally I remove it so I can easily move the chart from the left to the right. And if I check that button, it will always bring me till the end. Okay, so this is how these two buttons work. Now on the M1 chart, I will have one moving average. So I go to trends and I go to moving average, and this will be with period of 30. Alright, let me do it with some neutral color like orange, for example, because normally I display the fast moving averages with hotter color like red, and then if they become slow, I make them green and some other cooler color. Okay, in the middle, 20, 30, 40, 50, I normally use them with orange color. Here it is. Also, I will add the RSI indicator. I go to oscillators, and I will need to select the relative strength index. This is the RSI. And for the RSI, I will have period of 10. Okay, this is the smoothing period. And as levels, I will use not 30 and 70, but 40 and 60. Click on OK, and you will see the RSI displayed below the chart. So this is the setup of the first strategy, and for each strategy I will attach a PDF with the parameters inside, on which currency pair it works, what is the stop loss and the take profit. Now for this strategy I use stop loss 55 pips or 550 points and take profit of 80 pips or 800 points. As well, it is possible to add to the position for this strategy. Normally I add maximum 2 times, but I will talk about that in the next lecture. And then here are the parameters. So on H1 I have the MACD, on M30 MACD and MA crossover, on M1 moving average 30 and the RSI. So I created these sheets to be easier for you. You can print them on your desk or you can just have them somewhere on your computer for reference. And something very important, when I update these strategies, the expert advisors, when I change some of the parameters, I will change it right here in the sheets, so you will know where is the change. So for example, if I change the MA crossover, let's say with 15 instead of 5, I will enter 15 and I will underline it, so you will know that the underlined value is a new one. Okay, but for the moment I will leave it to 5. If there is no change with the strategy, simply below I will write down no changes, so you will know that there are no changes with this strategy. Alright, so with the time when I update the strategies, you will see different parameters from the video I'm recording right now and from the parameters in the sheet, because once again I will update these parameters whenever it is needed, and you will be able to see the latest parameters for the current market condition over here in the sheet. Okay, because something very important, guys, the market changes all the time, and I do my best to update the strategies so they will fit to the current market conditions. This is why I need to update the course for you, so you will have the recent parameters. Alright, I hope that's clear, and in the next lecture I will show you how I execute this strategy and what I'm looking at. Thanks for watching. Cheers! Once you are ready with your setup, you are ready to trade. As I said, what I'm looking at is M1, M30 and H1. I execute the trades on M1, but I want to have the confirmation on M30 and H1. So if I want to buy on M1, if the strategy shows me a buy signal, I want to make sure that on M30 and H1 the MACD shows the same direction. It confirms to buy. Alright, now what I'm looking at is the MACD indicator, and the MACD on MetaTrader is displayed with a signal line, which is the red line, and these bars as a histogram which form the MACD line. So it's like an imaginary line connecting these bars, and this is actually the MACD line. And when the MACD line crosses the signal line, like over here, it crosses the signal line upwards, this gives normally a buy signal from MACD, and when it crosses it downwards, this is a sell signal. But as I said, I'm using it for confirmation, so if I want to buy on M1 somewhere in this period over here, okay, in this zone over here, I will not have confirmation to buy. Actually, I will have confirmation to sell. Okay, because the MACD line is below the signal line. And if I scroll over the chart, you will see that there are many signals, many confirmations. Here I'm allowed to sell, here I'm allowed to buy, sell, and so on. Now let's take a horizontal line and I will give you some examples. For example, let's actually get to more recent data. This is from last month. Let's go a little bit closer, and I don't want to give like super easy example which is obvious. For example, right here we have a great selling opportunities, then over here great buying opportunities. But let's see what we would have right here, okay, on the 5th of February, for example, or a little bit later on the same day. Okay, this zone here, you can see here is very obvious that the MACD line is below the signal line. Here it crosses it above. But right over here, when the price is a little bit of sideways, you can see the MACD line crosses under the signal line, then it goes upwards, and these are the hard moments. I would place one vertical line over here, okay? What is it? 5th of February 2020 after 6 a.m. I have confirmation to sell already. Okay, I hope you see it. I will move it one more time so you can see it. Let me zoom actually. Okay, here it is. You can see the MACD crosses the signal line right here, 6 o'clock. So after 6, I have confirmation to sell for a short time, for 2-3 hours. Now let's see if we have confirmation on M30 at this time, and then I will look at trading opportunities on M1 if we had during this time. Okay, so I will go back to 5th of February, and while I'm looking for it, keep in mind that we have the slow and the fast moving average. So if we want to sell, the fast should be below the slow. If we want to buy, the fast should be above the slow. Here the fast MA is below the slow. Definitely I have confirmation to sell, and actually the confirmation came much earlier at 10 p.m. from the previous day, and then until right over here until 9:30 I have the confirmation to sell on M30. Okay, the MACD line is below the signal line. So on H1 we said it is from 6 a.m. I will leave one vertical line, and then until 9:30 or until this moment over here we have confirmation as well from M30. Okay, so in this zone for these 3 hours we were allowed to sell on M1 because we have confirmation on M30 and on H1. Okay, now let's see what happens at this time on M1. I will zoom it out to find the right place because these are a lot of bars on M1. Now that's too early, I need to go back. Let's scroll the chart. Let me put one vertical line. Where is it? 4th. Okay, I'm getting close. 4th of February. Let's see where is 5th. It's right over here, 5th. And we set from 6 until 9:30, right? From 6, it's right over here. Okay, now let me zoom and see what is the strategy actually on M1. So what I want to see in the time when I'm allowed to sell is I want to see the price crossing the moving average downwards, and at the same time the RSI crossing the level line downwards. This should happen at the same time between 6 and 9 o'clock. This is when I was allowed to trade from M30 and H1, right? Let me put that exactly on 9:30. Actually it was 9:30. Okay, from 6 until 9:30. Now let me zoom it again to make sure you see it clearly. We want to see the RSI crossing the level line downwards. For example, right over here, it crosses it one time, you can see, but the price is below the moving average. It's not crossing it. Now, if I continue, here is the next cross, right here, and this is our first sell signal, and it's confirmed on this bar, okay, right over here. Let me put one horizontal line over here. Okay, this is exactly where the price crosses the moving average and exactly where we have confirmed crossing of the RSI. Okay, it happened at the same time, at the same M1 candlestick. And this is at the price of 130.21. Now, we said that we can add to the position as well, but I add to the position only when it is on negative. In this case, the price goes down, the position goes on profit. So if there is a next signal, like over here I see one, I would not add to the position. Only if the price goes against me and I have another signal, I would add to the position, and I would add maximum 2 times to the position. Okay, now let me remove this line not to make it complicated. Okay, here is the entry 130.21. Now let's see where would be the stop loss and the take profit and what would have happened. Now I will place one line above for a stop loss, and this should be at 130.76. Alright, because we have the stop loss of 550 points, which is 55 pips, and take profit of 80 pips or 800 points. Okay, so let's have a look. It is at 130.21 plus 55 pips. That would be 130.76.7 to be more precise. And I click on OK, and you can see where is the stop loss. It's above right over here. Okay, now the take profit, I will put one line under. I will make it green because it's a take profit, and it should be 80 pips below the entry price. Okay, so that would be at 129.41.7. I click on OK, and let's see where it is. It's right over here. Okay, I will zoom it out to see what will happen after that. But for the beginner traders, the stop loss and the take profit are levels we can use with all of the platforms for Forex trading. And once we enter, we set this stop loss level and this take profit, so we don't wait in front of the screen to reach these levels. We place these levels, and when the price reaches, for example, to the stop loss, it will close the trade automatically. Okay, this is for the beginner traders. Or if the price reaches the take profit, it will take the profit automatically. First, we are protecting our capital so we don't go on a huge loss. And second, we secure the profit when we use the take profit. And of course, there will be losing trades with this strategy. With all of the strategies, there are always losing trades. But the idea, of course, at the end of the day is to have more profits than losses. Okay, but this is the stop loss and the take profit. For example, if I go to trading and I go to new order, you can see there is the place where I can set the stop loss and the take profit. Okay, and in our case, let's see what would have happened if we entered right over here. First, the price went a little bit on a profit. Then it went on a loss. You can see very close to our stop loss, but not hitting it. Then it went again on a profit, then a little bit sideways, and then over here it hit the take profit. Now, how I know these stop loss and take profit are working best for this strategy? 55 of stop loss and 80 as a take profit. I will tell you later in the course. I use software to calculate the best outcome for this strategy, and I have used it to find the best levels, and I share those with you, and later on in the course I will show you how that software actually works. But this is the setup, this is the execution. One more time, I look at H1, M30 to give me the confirmation with the MACD, and then I'm looking at M1 for trading opportunities. Or in other words, if I zoom it on M1, okay, and I go to the end of the chart, right over here, if I have confirmation that I can buy, let me go to the current moment. Right here, for example, at the current moment, I have confirmation to buy from the MACD on H1. I have confirmation from M30, and I will be looking for opportunities to enter on M1. For example, right over here, I had the chance to enter earlier, but I was actually recording this lecture and not trading at the moment, but you can see it's a great opportunity. Right over here, confirmation from M30, confirmation from H1, and I have the RSI crossing the level line at the same time when the price crosses this moving average upwards. So normally this is how you should be looking at the strategy if you are trading manually. Looking at H1 and M30 to show the same direction with the MACD, and then having the opportunity to trade on M1. Alright, that's the first strategy, and I will continue with the second one. Thanks for watching. Cheers! Hello dear traders, it's Petko Aleksandrov, and in this lecture I will show you the setup for the next strategy for dollar yen, which is on M5, and also here I use M30 and H1 as confirmation with the MACD indicator but with different parameters, and for the rest three strategies there are no such confirmation, so this is just for the pound dollar and for the dollar yen. Now this strategy is from my top 10 dollar yen expert advisors course. So basically I selected the best strategy out of this course. And when I say the best, it means that it performs the best till the moment. Of course, if any of the strategies start to perform better in the future, I will replace it. But this one at the current moment is the top performer for me. Now I see that I left white here the time and the price, which is from properties, and this is the foreground. It was left to white because the background was black, but now I have to switch it. Okay, here it is, so we can see the time and we can see the price. And I will just save the template so it will apply to the new charts when I open them. I will replace it with the white background. Here it is. Okay, save. Yes, I want to replace it. And now let me open two more chart windows. One will be for 30, one will be for H1. I will apply the template, white background. Here it is. Let me move it next to the M5 and as well H1 template, white background, and I will move it again here next to the M30. Okay, now these vertical lines that you see, these are the midnight. Basically they separate the days. If I take the crosshair, you will see this is exactly at midnight until midnight, and you can remove it as well or you can leave it, doesn't matter too much. Basically you know when the day started. Now what I'm using for this strategy on H1, as I said, it's again the MACD indicator but with different parameters. So I go to custom MACD, and on H1 I have 12, 14 and 9. Okay, here it is below. Now on M30 I will have again MACD but with parameters 12, 42 and 9. I click on OK. And here it is. Now on M5 I will have the Ichimoku indicator. This is what the strategy is based on. It's in the trend indicators, Ichimoku. And for the Ichimoku we have the Tenkan Sen, Kijun Sen, and we have the cloud, which is calculated from the Senkou span B and Senkou span A. And the parameters here are Tenkan Sen 9, Kijun Sen it will be 34, and the Senkou span B will be 72. I click on OK and you will see how it is displayed over the chart. This is the cloud, this one over here. And the most popular strategy with this indicator is that the cloud plays the role as a support and resistance. Basically if the price is above the cloud, it plays the role as a support. If the price is below the cloud, as in the current moment, the cloud is resistance. We have the blue line and the red line. The red line, this is the Tenkan Sen, and the blue line, this is the Kijun Sen. And we are using in this strategy the Kijun Sen. I will tell you in the next lecture what is the execution of this strategy, where I enter on the market, and I will need one more indicator, which is the Williams percent range. And the Williams percent range, you can find it in the oscillators, Williams percent range. Now the period will be 180. You can see much bigger than the default 14. And as style, I will change the color to red so it will be more visual. And levels, it is -20 and -80 by default. This is just fine. I will click on OK, and here it is. Anyway, we will not use the levels, but we will leave them so we can have an idea when the market is overbought or oversold. But we will use something very simple with the Williams percent range and something very simple with the Ichimoku indicator. And in the next lecture, I will show you how exactly this strategy works. See you there. Dear students, in this lecture, I will explain how the strategy on dollar-yen works and what is the execution, where exactly you need to enter if you are trading it manually. So what we said, we have the MACD on H1 and the MACD on M30, and then we have the Ichimoku and the Williams percent range on M5. Now this M30 and H1, we use it again for confirmation, just like with the pound dollar. And actually this is just for the two strategies. For the rest, they are on one and the same time frame, so there are no such confirmations. But for these strategies, we are using the longer time frame. Now with the pound dollar strategy, I said that we are looking to trade with the direction of the trend, with the direction of the higher time frame on M30 and H1, while on dollar yen it's a different case. Now on dollar yen on H1, the MACD, it allows us to trade long, to buy when the MACD line is lower than the signal line. So pretty much that's the opposite thing. We can buy when the MACD line is below the signal line. And on M30, we can buy when the MACD line is below the zero line, which is the line right over here where the MACD becomes negative and positive. This is the zero line. It's pretty much the opposite thing. And what is the idea? Very simple. With the dollar yen, we're looking to buy on M5 when the price is cheap on the higher time frames, and we're looking to sell when the price is expensive. Okay, so when the MACD is above the signal line, the price gets expensive. We want to sell it when it's expensive, and we want to buy it when it is cheap. So the difference is that the pound dollar strategy follows the trend, and the dollar yen strategy is more of a range strategy, or more of a strategy that aims to buy one more time when the price is cheap and sell when the price is expensive, and you will see how that works. Now let me arrange the chart so they will be more visual again. Here is the H1 chart, then I will have the M30 right over here, just like I did for the pound dollar, and the M5 I will place it right over here. Let me move to the end. I just press the end button on my keyboard to go to the end. You can see that at the current moment I don't have confirmation to trade, because on H1 I have the MACD below the signal line, which means that I'm allowed to buy. But on M30 the MACD line is above the zero line. So these two, they don't confirm each other. At this moment, I should not be looking at all at M5 because there is no confirmation. Now, what is the entry condition on M5? Let me make it bigger. We are looking to buy when the price crosses the Kijun-sen line, or this is the blue line, upwards. Okay, when it crosses upwards, we are looking to buy. But we need to have the confirmation that the Williams percent range changes its direction upwards at the same time. Okay, so for example, if the price crosses the Kijun-sen at this moment over here, we need to see that the Williams percent range changes its direction upward, meaning that it was going down and it's changing the direction upwards, just like over here, here. Let's see at this recent moment when the price broke here the Kijun-sen, you can see that I don't have such a reversal in the Williams percent range. It comes a little bit later over here. Okay, you can see it goes down and it goes up, and this is for the second break, and that would be a great entry. But as we said, we don't have the confirmation from M30 because it's above the zero line. All right, so this is when we are looking to buy. When we are looking to sell, we need to see the price crossing the Kijun-sen or the blue line downwards, and at the same time we need to see that the Williams percent range changes its direction downwards. Alright, these are the two rules that need to happen, the two events that need to happen at the same time on M5 in order to enter on the market. Now let's see where we have confirmation from H1 and M30, and we will have a look at an example. So I will make it just this way, it will be more visual for H1 and M30. Okay, here it is. So let's have a look when we can buy or sell on M5, confirming on M30 and H1. Okay, for example, you can see on M30 all that period the MACD line is below the zero line, which means that it allows us to buy. Okay, so when the MACD is above the zero line, it gives us the confirmation to sell. Okay, for example, you can see right over here, what is that, 24th of January. After that long period, we have the MACD above the zero line, which gives confirmation to sell. Let's have a look if we have the same thing on H1. One more time, this is 24th of January, I think. Yeah, let me take the vertical line right over here. I will move it right here, okay, from 10:30 on the 24th of January. Let's see, I think it's exactly right here, this one, but not over the MACD. I will place it over the chart. You can place lines over the MACD as well, but I prefer it to be over the chart. So you can see that the confirmation for MACD starts when the MACD line crosses the zero line upward, but for H1 the confirmation to sell starts from right over here, okay, when the MACD line is above the signal line. Until this moment, let me grab one more vertical line, and it is until right over here, okay, the previous one, or even this one, until over here, actually this one over here. Okay, this is where the MACD line crosses the signal line downwards. So you can see that the period that we are allowed to sell on H1 is much longer. This is when the MACD is above the signal line. But on M30 it's much shorter when the MACD line is above the zero line. So here we are not looking at all at the signal line, just the MACD. Okay, when it's above the zero line, we have the confirmation to sell. Okay, now let's have a look what we have on M5. We said this is starting from 10:30 on the 24th of January. 10:30, 24th of January. Let me zoom out and I will go back to 24th of January. 24th of January. Where is it? Right over here. Okay, I skipped it. 24th, 10:30. All right, here it is. Here is a vertical line. I will place it on 10:30 so we know after what time we are allowed to sell. Now we said that on M5 we're looking to sell when the price crosses the Kijun-sen downwards. I will make it bigger, and at the same time we want to see the Williams percent range changing its direction downwards. Alright, in this example we have confirmation after 10:30 on the 24th, and you can see that the first cross came right at this moment, okay, but at this moment the Williams percent range is just going downwards. There is no change in the direction. Alright, then the price goes up you can see at this moment it went above the Kijun Sen, above the blue line, and then it went below on this bar, which is a cross. We consider this as a cross because it went above, then it went below. Even very small distance, still it's a cross. Okay, now on this line, what you see is exactly what we need to have as confirmation. The Williams percent range changes its direction downward. So if you follow the crosshair, the price is going up, it goes above the blue line, and at this moment the Williams percent range is going up. When the price goes down on the next candle below the blue line, you can see that the Williams percent range changes its direction. And this is the first entry we can have right over here. I will place a horizontal line as well, exactly when it's crossing the blue line. Let me make it red just because it's a sell signal. Okay, here it is. And now for this strategy, what I have is stop loss of 70 pips and take profit of 80 pips. In the previous lecture, you will get the sheet with the setup. So stop loss is 70 pips or 700 points, take profit 80 pips. Okay, so stop loss is 70 pips. Let's place the stop loss and the take profit so we will see what happened after that. I will change the parameters. Entry 109.58 plus 70 pips, that would be 110.28. Okay, I click on OK and it went above on the right spot. And as take profit, we said we have 80 pips, so I will place another line. Let's make this one green since it's a take profit. Okay, and as parameters, what I will have 109.30 minus 80 pips, that would be 108.50. Okay, not going into the details because I don't want to use the calculator now, but here they are. Okay, this is the stop loss and this is the take profit. Let's zoom out a little bit. Okay, so you see where is the entry? It's right at this moment. The price went a little bit on negative, then it went to a positive, going down, and let's see what happens after that. The take profit is still far away. Price goes sideways. Let's zoom out. This is M5, guys, so keep in mind it's a lot of bars, it's a lot of data that we have, but I just want to see what happened. The price here went towards the take profit. Now it's a personal choice if you want to take the profit a little bit earlier or no. Now if you're in front of the screen, I would suggest you to take the profit if you see that you are getting very close, because sometimes you will notice that the price goes towards the take profit and then reverses and might hit the stop loss. Personally, what I do if I see the price going close to the take profit and it has less than 10 pips to reach the take profit, I close it and I take the profit. This is if I'm in front of the screen and if I see it, but the idea of the take profit at the stop loss is not to touch it. Yeah, you can see what happened. The price went up and then it went down and it hit right over here the take profit. Okay, so having a take profit and a stop loss eliminates the emotions. Let me zoom it a little bit to see where was the entry. Here it is. Many times when you enter, you will see the price going against you and people start to feel fear that they will lose and they hurry to close the trade. But there is the stop loss, and as I said, with these strategies, the stop loss and the take profit, they are at these places for a reason, based on a lot of statistics and algorithms that I have used to see which are the right levels. So try to avoid the emotions. Personally, when I trade manually, I place the stop loss, I place the take profit, and I just leave the trade and I don't look at it. Okay, anyway, you will start to feel a lot of emotions. Fear when the price goes to a loss, even fear when the price goes to a profit. You will feel afraid not to lose your profit. So for example, if right here you have $40 but your take profit is at 80, people feel fear that they will lose their profit and they hurry to close the trade. But as you can see, price goes sideways for a couple of days and then it hits the take profit in this example. Okay, so the idea of stop loss and take profit is to avoid the emotions. Alright, so this is the strategy with the Ichimoku and the Williams percent range. Pretty interesting strategy. You will need some time to get used to with the indicator if you're using it for a first time, but with this strategy we are using just the blue line. Okay, thank you for watching. If you have questions, let me know. Cheers.